Good morning, everyone. Welcome to Ainsley News. Today we're talking crypto. What a week. BTC's hunting for maximum pain. The Bitcoin market has reeled from a massive deleveraging event this week, both in on-chain DeFi markets and off-chain, as exchanges, lenders and hedge funds being rendered insolvent, illiquid or liquidated. The market sold off below the 2017 all-time high of $20,000 on the 18th of June, reaching a truly remarkable low of $17,708. Prices did, however, recover to the $20,000 level on Sunday. With Bitcoin and digital assets being the only tradable instruments over the weekend, macro fears and demand for dollar liquidity appear to have been taken out of the space. As a result of this extreme deleveraging event, we've started to see signals of capitulation across several entities, including miners, long-term holders, and the aggregate market. With the market trading below the $20,000 2017 all-time high, investor conviction and market profitability have been put to an extreme test. The realized loss metric measures the total value between coins that were acquired at higher prices and the price when they were subsequently spent on-chain. Realized losses reached a new all-time high, punctuated by 3 consecutive days with market-wide realized losses above $2.4 billion a day, totaling $7.325 billion. We can also investigate the profitability of specific investor cohorts relative to their realized price, which is the average price of all coins based on when they last moved on-chain. We'll show you a few charts today, so jump over to ainsleyBullion.com.au and you can check these out. This next chart represents the MVRV ratios, or market value by realized value, for 3 Bitcoin cohorts: the whole market, STHs, short-term holders and long-term holders, which shows that all of them are now at a loss and holding coins below their cost basis on average. Previous instances where all 3 cohorts were at an unrealized loss have coincided only with late-stage bear market capitulations, providing confluence with the above profitability metrics. These maximum pain thresholds in supply can be investigated from different dimensions. From the charts we show you, supply and profits shown as blue dropped to just 49% as the market traded down to 17.6k, putting more than half of the supply into an unrealized loss. Historical bear market floors have bottomed between 40 and 45% of supply and profit. Addresses in profit, shown in orange, addresses the profitability among individual wallets and returns similar results to supply and profit. This metric is now just 10% higher than its lowest level in the 2018-19 bear market and COVID crash, indicating just marginally less pain than those bottoms. LTH, or long-term holders supply in profit, that's shown in red, monitors the profitability of long-term holders as a gauge of severity of stress on Bitcoin's strongest-handed investors. At the moment, 35% of long-term holder supply is at a loss. This means this cohort is still shouldering less pain compared to the past bear markets, where long-term holders held 42% to 51% of their supply in loss. There is an expected natural drift in the floor of these metrics as coins are lost and hodled over time. As such, the sell-off over the weekend can be considered to have plunged profitability and investors into a historically meaningful degree of financial pain. The falling dominoes of the current bear market are advancing to a new phase. Alongside miners, long-term holders are now beginning to feel the pressure, forcing many of them to sell at an accelerating rate. Long-term holder supply has declined by 178,000 Bitcoin over the last week, equivalent to 1.31% of their total holdings. Revive Supply 1 year confirms that spending by older coins is taking place, accelerating to rates of 20,000 to 36,000 BTC per day. This reflects an influx of fear and panic within even Bitcoin's stronger hand cohort. To summarize what we've witnessed in the last week in crypto, the Bitcoin market has now experienced 2 distinct capitulation phases since the all-time high in November 2021. The first phase was triggered by the Lunar Foundation Guard Force selling its 80,000 plus Bitcoin, and the second this week via a massive industry-wide deleveraging both on and off-chain. Miners are now under significant financial stress, with BTC trading near the estimated cost of production, incomes well below their yearly average, and hash rate noticeably coming off all-time highs. The aggregate market has realized over $7 billion in losses this week, with long-term holders contributing some 178,000 Bitcoin in additional sell side. Based on historical data, We are currently in the later phase of a bear market. Is it a good time to take advantage of it? We'll leave that up to you guys to figure out. Jump over to ainsleywealth.com.au if you are looking to purchase today. It is a great time to buy. They always say buy the dips. This is one of those bigger ones, but we'll leave it up to you. Jump over to Ainsley Bullion if you're after some physical stuff, gold, silver and platinum, and goldsilverstandard.com if you're looking for a brilliant stablecoin to park your profits, or even just to hide out for a little bit before purchasing in for more Bitcoin and other crypto at your leisure. Enjoy your Tuesday, everyone. We'll catch you tomorrow for more news.